Hi guys, welcome back. This is Sam Mao for Wealthwise. Today we're going to talk about 7 strategies or 7 areas where you can invest in the market downturn. So traditionally we have seen when the Fed and different governments across the world start cutting down or start doing interest rate cuts, there has been a market downturn of up to 20 to 50%. Just like in 2009, it was up to 50%, and in some cases, it was up to 20%. And during this downturn, which lasts almost 6 to 18 months, where can you invest and keep yourself secured so that you do not have to go through the stress of your money becoming, uh, you know, 50% of what its original value is. And we have already seen this trend happening right now in the last couple of days, the market going down, and even stocks like Nvidia and Meta have taken a hit, and despite their profitability being really good. So let's talk about 7 areas where you can invest. So the number one is fixed income instruments. You can invest in term deposits. You can invest in bullion bonds, and you can invest in fixed income instruments which give you consistent return month over month. So that would be the first one. Number two, you could invest in bonds and debt instruments. So debt bonds like BND, leverage market treasury funds like TMF. And today TMF has gone up by 11%, BND has gone up by 1%. Those kind of bonds, including government, public sector, municipal, private, and REITs, are a great way to invest and get returns during this downturn. Number three, we're going to talk about dividend ETFs. So both Charles Schwab and Vanguard are very popular. You could also go to others like DGROW and NUSI and USI, which give you consistent returns, but going up with proven ETFs, which give you consistent returns like Vanguard and Charles Schwab, is a great way to kind of consistently get your returns both on a quarterly or a monthly basis, depending on where you invest. Number four, value investing. You go after high quality companies, which are blue chip companies, top 5 companies in each of your sectors, which give you consistent returns and have consistently increased their dividend, such as Microsoft or Meta in the IT sector. It could be, Pfizer, it could be Novartis, it could be one of those companies which are doing well in the pharma sector. So you look at the top 5 companies in each sector which have consistently given dividends, and that value investing, you get more for less during the downturn, and ultimately you'll come back and it'll still exceed the level you have been buying at over a period, and that's a great way to invest during the downturn. So that value investing is the number four. Number five would be investing in real estate. So we are seeing real estate in different parts of the West Coast as well as the South, down South in Florida. They have started having excess inventory because of the high interest rate. The mortgage applications are at all-time lows. So as long as you get the real estate below the construction cost and you can wait for 3 to 5 years period, you will come out a winner, and you might be able to 2x or even 3x your investment. So real estate is the number fifth thing that where you want to invest during the downturn. Number six is capital preservation. So you always want to keep a safe kitty of emergency funds. You want to invest in areas which preserve your capital, which are not volatile. So you want to do maybe a 60-40 or a 70-30 split, and you always want to keep that 40 or 30 or 20%, depending on your age group and your appetite for risk, into lower risk categories of cash bonds or instruments which are secured, so that you do not have to go through too much of a turmoil and stress during the downturn. So that's number six. Number seven would be typical diversification. So there are sectors which do well, and there are sectors which go down, and there are sectors which come up very fast. So for example, technology sector goes down the fastest, but it also bounces back the fastest. On the other side, financial sector may be more stable, but it takes much longer to bounce back. And the healthcare sector also, smaller genetic companies might go down much faster and they bounce back much faster. So you diversify your portfolio depending on your risk appetite, so that you have the balance of up and down, and then overall you still get that stability that you have been always looking for. So there you go, guys. Those are the 7 areas or 7 sectors where you can invest, or 7 instruments where you can invest. And hope you like this investment strategy of mine. If you do like it, please like and subscribe this channel. We will shoot out videos to you and inform you whenever the new videos come up, and we'll try to keep it more diversified both from an investment and career standpoint, as well as settlement of baby boomers in the industry. And this is Samuel signing off for Wealthwise. Thank you guys, and look forward to talk to you in the next video. Thank you.